I moved around to a couple other companies that were growing through acquisition. And then in 2006, I found myself getting fired from my corporate finance job. And so this was like the third time I had been displaced out of a corporate job in the last 4 years. I had a wife and a 4-year-old and a 2-year-old at home. So I was like, screw this. There's got to be a better way. There's no such thing as, corporate security and all that, job security. So, thankfully, when I did get fired, I had some golden handcuffs. I was a vice president at a publicly traded company, so I had stock options and bonuses and stuff like that. So I was able to put some money aside and launch my real estate empire. Of course, the funny thing there, Scott, is it was 2006, right? So those next few years, I learned some hard lessons and lost a lot of money. But, I wasn't really deterred too badly. Knew, even though it was scary.
Welcome to the Yacht Captain Investor Podcast. I'm your host, Scott Kidd, where every week we dive deep into conversations with real estate pros, business owners, and maritime professionals about their mindset and journey to success. Please help support us on our journey and our channel by liking, subscribing, and commenting below so we can help you in your journey to success.
How you doing today? Scott Kidd, the Yacht Captain Investor Podcast. Today I have a friend of mine here, Tom Dunkel. How you doing today, Tom?
Doing great, Scott. Hey, it's good to be with you and all the listeners. Looking forward to our chat today.
Well, thank you so much for being there. I think we kind of met through Raise Masters a while back, but there was probably some crossover. That's
right. We probably passed each other in a hallway somewhere at one of those events. But Raise Masters, great group, great group of people, a lot of fun. So that was good times. But I guess we've both since sort of moved on. Yeah,
I definitely had a great experience. I still keep in contact with a lot of the people. For people that don't know you, the 2 or 3 people that don't,
right.
But just tell us a little bit about yourself and what you're working on.
Yeah, sure. I'll try to keep it short and sweet. I'm solidly in my 50s now, so if I start to ramble, just wave at me or something. I was a corporate guy. I got out of business school and went into corporate finance, mergers and acquisitions in the aerospace industry, which was amazing. I worked with some really top-notch people at that part of my career very early on. Naval Academy graduates and ex-fighter pilots, and the CEO of the company was a Harvard Business School guy, did investment banking, and at the time he was a young dude, and he put this management team together and bought this company. And anyway, a year later he brought me on as a senior financial analyst. So I was really, kind of working the Excel spreadsheets and doing the projections and doing the valuations and basically preparing like the financial package that he would then present to the board of directors to get approval. And then we would go out and raise the capital from the banks and the private equity funds. So it was really, early on I got, some just great training as far as putting deals together and the best way to do that and how to do the projections and all that cool stuff. So anyway, so I took that skill set and I just sort of built on it over the next 8 to 10 years. I moved around to a couple other companies that were growing through acquisition. And then in 2006, I found myself getting fired from my corporate finance job. And so this was like the third time I had been displaced out of a corporate job in the last 4 years. I had a wife and a 4-year-old and a 2-year-old at home. So I was like, screw this. There's got to be a better way. There's no such thing as, corporate security and all that, job security. So, thankfully, when I did get fired, I had some golden handcuffs. I was a vice president at a publicly traded company, so I had stock options and bonuses and stuff like that. So I was able to put some money aside and launch my real estate empire. Of course, the funny thing there, Scott, is it was 2006, right? So those next few years, I learned some hard lessons and lost a lot of money. But, I wasn't really deterred too badly. Knew, even though it was scary, I felt like it was natural for me to be out doing, my own deals and doing something entrepreneurial. So I stuck with it. I kind of repositioned myself and pivoted into distressed mortgage debt after starting out in residential real estate, and that went crashing down. I pivoted into distressed mortgage notes, which was great. And that company still is going strong today here about 16 years later. We've done over $70 million of revenue in that business. So that's been awesome. And it certainly had its ups and downs. There's no straight line there at all. In fact, it took us about 8 years to really get things going. So once we kind of took off, and people were like, wow, you're like an overnight success story. I'm like, yeah, it took us 8 years to be an overnight success story. But anyway, the success of that business has allowed us to get involved in some other things, self-storage, family, and that sort of thing. About a year ago, I told my business partners even prior to that, hey, once we get this self-storage business up and running, I'm going to want to peel off and kind of do my own thing. And so I did that kind of beginning of 2025, so a little over a year ago. I started Eagle Capital Investments, and basically I'm a fund manager. I'm putting my own money to work. I'm really looking for deals for myself, and then I'm just inviting along with me the investors who I've cultivated over the last X number of years and raised 20 million of equity from them. And I'm placing that capital with trusted operators who I've come to know, like, and trust through my journey that are in multifamily and mobile home parks, and I really like the medical office space. I haven't made an investment there yet, but that's a space I'm looking at. And I also love private lending. I love the cash flow from that. So I've got a little fund going, and that's basically what I'm focused on these days, Scott.
That's pretty great. There's definitely some crossover there because we do medical office development, and we have 7 of them, I believe, getting sold into this month. 3 of them are just gone under construction. And I believe the partners that are involved in that, they're looking at a 2 to 3x multiple in 2 to 3 years. Not to say that that's the norm, but things kind of worked out that way. But there are a lot of options to that because they really don't take much time to be built. They're basically steel, and the surgical groups we partner with, they do the build out and they do the whole where it needs to be. We either come in as just on the development side, or we come in and we also bring a part of the capital, like 49% or something. That way they still have control and everything. But it's a pretty interesting model.
I love that model because, if you think about it, like, when was the last time your dentist changed offices or your doctor or whatever? And of course, with the aging population that we have, doctors are more and more in demand, and there's a lot of money going into that area. Yeah. So I really like that space, and it's very easy to understand, right? Yeah. I once had a guy tell me a long time ago. He's like, if you need a calculator.
Are you investing blind? Most passive investors don't know what questions to ask, and it costs them dearly. That's why I put together 125 essential questions. The ultimate due diligence checklist for apartments, syndications, and funds. Cover every critical area: the operator's track record, the loan structure and refinancing risk, property condition and capital needs, market demographics and competition. Ask things like, how many assets have gone through a full cycle? What is the loan-to-value ratio? What is the break-even occupancy? This is the checklist sophisticated investors use, and now it's yours free. Get instant access at investwithscottkid.com interactive. Trackable, exportable to PDF. Protect your capital. Invest with confidence.
You need a calculator to figure out if it's a good deal or not. Forget about it. You should, if it just makes sense to you intuitively, that's probably a deal you should take a look at, and maybe scratch out some numbers on the back of an envelope or something.
Yeah, if you can do it on a napkin. Yeah, simple. What we like about them is they're simple and stable, and the tenants are notoriously sticky tenants. They're 10 to 15 year. Yep. There you go. Granted, the returns are not as, you don't get the giant pop that you would in some other value add stuff, but you don't have the hassle. They're stable. They're brand new assets. Right. They have escalator clauses every few years, and all those kind of things. And
that's right.
Actually, the 7 that we have are being sold to a potential long-term institutional partner. So we could be building quite a few of these for
Oh,
for
that's
that
awesome.
institutional buyer. So, the key with that is the surgical partner. The surgical group has to be educated and understand how they can benefit from the real estate side, and that's what we focus on, is finding those partners and educating them on, because the business has to pay rent somewhere, whether it's to them or to someone.
That's right. Yeah, I mean, there's so many cool ways to play in the real estate space. And, what I love about it is you get the capital preservation, right? You're investing in a hard asset, right?
Yeah.
You get cash flow because you have people paying you rent, to be in your space. And you get tax advantages, right? So, the government, the IRS code, like, they want you to own real estate.
Yeah.
Because we need it. We need so many different types of real estate with our growing population.
Yeah, it's a lot of people always call it tax loopholes, and that by the evil landlords and everything taking advantage of the system, but they are built in to incentivize people like ourselves to build, develop, rehab, because these areas get blighted after time, and they do need to be restructured, refinanced, recapitalized, rebuilt, and it's good for all of our everything at a certain time wears out, and with our growing population, like you stated, we need more of these things, whether it's medical office, multifamily, self-storage, RV park, all that stuff we need more of. And without that, I don't think that, it's kind of proven, this is my opinion, that, a lot of the government housing options have really not done very well.
No. They put so much red tape in place. They're trying to make it affordable housing or whatever, but they make it a bad deal for the investors that are putting up their hard-earned knowledge and work and money. And so, I've been down that path, and it's so frustrating because we do have a problem there. And that's honestly you shared some really cool stuff with us, but one thing that I really like about, like, mobile home parks, for example, mobile home parks are not the rent is not subsidized. It's not like, affordable, Section 8 housing in like an apartment or a house. Like, that's a nightmare. I've lived that nightmare as a landlord in my prior life, and I've got the battle scars here still to show it. But mobile home parks, these are not subsidized. So these are hardworking families that just want a house to rent or own, and so they're not getting any assistance, and that's a much better tenant. That's a much more engaged and committed kind of tenant, and that's what you want. And that's, I think, another reason why medical office is really cool. Look at the quality of these tenants. I mean, these are now, look, doctors are not the best businessmen, but they do make some money in these practices, and so that's a great tenant to have, as opposed to, and this is from my own awful experience as a landlord, having residential properties in like an urban area. That's tough sledding, man. You got to have a certain kind of personality for that. I did not have that personality, but one of the best days of my life was selling my last rental property. Yeah. So now I like multifamily, I like mobile home parks, I like medical office. These are in places where you've got good tenant base. So, a nice growing economy, good paying jobs, high level of income, in those areas. So there's a whole bunch of several rabbit holes we could go down there, but those are all things I'd like to look for. And my last little comment would be on self-storage. You don't have a tenant. I mean, you do, but the tenant is off somewhere else and they've stored their stuff with you, and now you've got them on an auto pay. Talk about, you mentioned sticky earlier. So you got this sticky tenant who's, paying you monthly to store their junk in your facility, in your unit. And so that's a great business model as well. And there's no toilets that are going to back up or whatever.
No real tenants or toilets living in the place. Yeah. If you do have tenants living in your storage facility, you got a problem.
And we've certainly run into that. We've absolutely run into that. Yep. Yeah, it happens. And so you just have to have your manager on top of things. And it is, like anything, there's going to be some pros and cons, and that's certainly one of the challenges.
Ups and downs, and we've looked at some other, when you were talking about Section 8 stuff, but it's more stuff that were built to be Section 8 in certain areas where they were close to all that, and it's all going to be new products. at a certain point, it's going to be built to sell within 5 years kind of thing. But we'll see. We'll see where that goes. But we like the medical office space. We like the multifamily. Yep. And our stuff is all ground up new construction. We like that because we have a very solid development team of 35, 40 years. So the track record there. So
that's what I was just going to say is when you do run into those problems, that's why you want to make sure that you're investing with a solid, experienced operator that has a team. They've got a track record. If it's like, Joe Mobile Home Park guy at gmail.com, like you probably don't want to be investing with that guy, You want to make sure that there's a solid team behind him. He's got the track record and he's got the character and the integrity. And so like the operators that I invest with, like these are people who I've personally come to know, like, and trust. Like I've probably met them at like maybe a Raise Masters event or some other mastermind or investor networking kind of event. And I've actually met with them, and some of them I played golf with, some of them had a few drinks with. Had spent some time with personally, and those are the people that you can really invest with confidently. And what the other thing that's cool, Scott, is all this stuff we've talked about. What a great diversified portfolio of investments, right? Financial advisors are talking about you got to diversify, you got to have small cap, mid cap, and large cap, and value and growth. That's not diversification. The stuff that we're talking about is diversification.
I always found it funny that real estate is seen as an alternative investment.
Drives me nuts.
Because everybody I've ever worked for on these yachts, they all have real estate, and real estate is much older than the stock market.
That's right. Hell yeah. It's funny you mention that because I say the same thing. It's like, Wall Street is the alternative.
I don't have any issue with any of it.
What if you could buy your first investment property in just 30 days? With a proven playbook built by a pro with 25 years in the game, it's not just possible, it's a plan. Scott Kidd's complete bundle gives you everything you need. 7 professional tools, delivered instantly. No fluff, no guesswork. Just the exact roadmap to your first property. From Yacht Captain to Managing Director of Capital Markets, Scott Kidd has navigated deals most investors only dream about. Now he's handing you his full playbook. If you're a high earner who keeps researching but never pulling the trigger, if you feel overwhelmed by the process, this was built specifically for you. Virtual walkthrough guide and the napkin deal calculator. Inside, the 30-day checklist property locator playbook. By Box Builder, Market Scorecard, Agent Vetting Script. And right now, free bonus access to all tools, including the Portfolio Investor Clarity tool. Visit investwithscottkidd.com and get the bundle today. Your first property starts now.
With any of it, I think you have to do what works for you, but diversification within other stocks is not necessarily diversification. If you're going from like bonds to, or a loan instrument, a debt instrument to a stock and equity, that's some diversification there. But
housing, lending, that stuff goes back to biblical times. Absolutely. And look, I have a stock portfolio. I have a diversified stock portfolio, but I own, alternative assets too. It drives me. You know what? I think we should try, Scott. You and I can start this. We need to start calling them like private assets, not private alternative assets. I think private, because a lot of times you have to go through a private placement to get into them. But
it's true.
The word alternative drives me nuts too. But it's important to have it all.
Well, because private has come up when in your fund, because you are doing basically private credit because you're involved with that, but it should be private equity as well.
That's right.
That's right. That's an interesting thing because I don't really like the word alternative because for me it should be the mainstream, but up until 2012 with the Jobs Act, you weren't allowed to advertise, still it was all pretty much word of mouth. And one of the first guys I worked for was a real estate developer on the yachts. He gave me my first captain's job, and he, all the stuff was private, privately held. We had investors on the boat, but they were a lot of the people worked for his company or were, people he knew. So you had to be invited in. And I believe a lot of the really high level deals are still really, as a closed loop for the most part. Like
Totally.
But
Yeah.
the good part about the Jobs Act really is it opened up so that you and I can do what we do now and share it with other people.
That's right.
I also have a little bit of an issue with the accredited investor criteria to get into, these.
Mm-hmm.
I think now they passed a thing where you can pass a test, but there's no one administering the test yet. It's going to get there, because I think if you're educated enough, you should be able to invest whatever you want. Because I can go down the street, take all my money, and put it on in the casino on black and lose it all in the same night. So, and I can do it in a Robinhood account tonight too, if I want to. But I can't go and invest in a real estate deal because it's more exclusive than inclusive.
Mm-hmm, mm-hmm.
But that's my rant for the day.
Yeah. No, I hear you.
Because I would, a lot of people, when I'm speaking to them about it, when I tell them about how it works and the returns, they see it and they go, whoa. Everyone's taught to get a certain amount or it's a scam.
Yeah.
But that's not necessarily true.
That's right. Well, and that's where Wall Street is. They've got the big marketing dollars and they've got all these advisors out there, and that's what they say to their clients.
Well, it's really because, and this is just my take on it, is because, they get paid based on assets under management. So if the money goes out of their purview, then they're going to deter it because that's benefits.
That's right.
And that's just.
I had a friend of mine, off buddy of mine. He's a financial advisor, and we were talking about, at the time I was raising money for self-storage deals, and he was like really interested in it. And I was like, well, yeah, do you have some clients that you think would be interested? He's like, why would I give my clients to you? That's money, those are dollars that come out of my business that I get paid on and send them over to you. He's like, why would I do that?
I mean, you could work something out where, where everybody benefits. But, it's kind of a me first mentality a lot. Because their world is very cutthroat. I mean, it's a tough, it's, any kind of straight commission, straight sales kind of thing is it's dog eat dog, and you better not be wearing milk bone underwear.
That's right. Hey, one thing you mentioned a little bit ago, Scott, I wanted to highlight because I thought I didn't want it to go missed, is that if I heard you correctly, you were captaining a yacht for an investor who had people come and hang out on his yacht, right? So guess what? That's a tax deduction. Well, right? He's doing business on his yacht. He can,
he was, this is 20 plus years ago, but he had it. He had been doing it for many decades, 50, 60 years. So he knew, teams of people, and he always knew. He was always a step ahead, he's passed on. He was a great guy. But
that's too bad.
I'm pretty sure his family and everything, all of them are reaping the benefits.
Yeah, but that's how you play the game, right? It's like these days, if there's an event out in Scottsdale, right? My wife and I, we're golfers, so guess what? We're going to go out there. We're going to play some golf, go to the event, and have a nice juicy write-off through the business. So, and that's what a lot of these guys do. I think there's another Raise Masters guy who was inviting people to some event over in the Mediterranean or something, and I think he was structuring it so basically he could get a free vacation for his family or whatever and get some tax deduction. But those are the games that you can play. I've seen it said that I've seen it on Instagram or other places. Not that these should be trusting those, just on their faces, but wealthy families, right? They don't go on vacation; they go on like business retreats, right? where the family members are participants in the business. So you got to do it the right way. Check with your tax advisor. But there's definitely
tax advisors or financial advisors or lawyers.
That's right.
Make sure contact your professionals. We got
that's right. We're just talking here, having some fun.
We got the disclaimer. This is all for educational purposes only.
Exactly.
Well, this has been great, man. I look forward to having you on as you get further on in your own fund. I'd like to hear how that all comes out and everything. Gladly share the medical office stuff with us just so you get an idea of checking it out or whatever.
Hell yeah.
What's the best place for people to find you if they want to find out more about what Tom's doing?
Yeah, Scott, this has been great, buddy. So I'm Tom Dunkel. I'm the managing principal at Eagle Capital Investments. And if you go to investwitheagle.com, scottkidd.com. You can pick up a free copy of my book.
Nice.
The Wealth Builder's Playbook. I had a lot of fun writing this. It was actually an AI project, just full disclosure. So it's pretty cool what you can do with AI. But I had some fun with it. Like, I'm a golfer and I enjoy a bourbon from time to time. So I tell a lot of, the book is structured kind of like a bunch of stories. Each chapter is kind of a story about, like, the guy, pulls up to the club in his McLaren and he goes out and plays golf with his buddies. And they're all talking about these cool, multifamily deals that they're in. And he's wondering why he's getting killed in taxes in his stock portfolio and why it's so volatile and all this. So anyway, I had fun writing it. I hope you have fun reading it, but there's some good stuff in there just from my 20 plus year career as an entrepreneur and 30 plus just doing deals and finances and investments and all that stuff. I talk about my due diligence system in there. And anyway, check it out. Have some fun with it. And you can also reach out to me through tomdunkel.ai, like it says on the screen here. That's my clones. You can go talk to me virtually and have some fun with that too. My wife was trying it out recently, and next thing I know, she's talking to my AI clone about like a chocolate cake recipe. I'm like, what are you doing that for? It's supposed to be for investing talk and stuff, but whatever.
Are you investing blind? Most passive investors don't know what questions to ask, and it costs them dearly. That's why I put together 125 essential questions. The ultimate due diligence checklist for apartments, syndications, and funds. Cover every critical area. The operator's track record, the loan structure and refinancing risk, property condition and capital needs, market demographics and competition. Ask things like, how many assets have gone through a full cycle? What is the loan-to-value ratio? What is the break-even occupancy? This is the checklist sophisticated investors use, and now it's yours free. Get instant access at investwithscottkidd.com interactive. Trackable, exportable to PDF. Protect your capital. Invest with confidence.
Whatever. Go on there and have some fun with it.
No, that's really cool. Well, thanks for sharing that, and thank you so much for coming on. I look forward to our next conversation.
Yeah, sounds great, Scott. Thanks.
Well, thanks again. This is Scott Kidd, the Yacht Captain Investor Podcast. As always, a quick reminder that the best investment you can make is the one you make in yourself, so invest heavily in you. See you next time.